The stock markets have been absolutely raging recently. We have seen new all-time highs for the S&P 500, the Dow, the Nasdaq, and others. In fact, the S&P 500 has been on a bull run for 10 and a half years straight, the longest bull market in history. Basically, this has been going on ever since the fiery crash of the post-2008 financial crisis when the S&P had a brutal 58% correction. The S&P just keeps hitting new high after new high after new high. But as we know, nothing goes up forever. And it is increasingly likely that the stock markets are in for a major correction. Will Bitcoin be the beneficiary of a major market event? Well, first, let's dig into the stock markets to get a feel for just what is happening out there. Even though some analysts are saying that this is the top for the stock market, there is, of course, always the chance that the bull market can continue for quite a long time. One simple factor driving this, of course, is human greed. Greed's a crazy thing. As long as there are new buyers to come in and keep buying the top, then the markets will continue to move up. But it is true that no bull run lasts forever. But this one could last for a bit longer because we have a wild card factor here working in the favor of the markets continuing their unbelievable run that they've been having. And that is that major financial players in the market, like the big banks, are basically getting free money. Free money, well, next to free money from the Federal Reserve. And the Fed can and will just keep printing that money and handing it straight over to the commercial banks. Meaning that while they debase the currency, they are also continuing to gobble up every asset that they possibly can. And it's not just the banks, which is the crazy thing. The rich, the top 0.1%, they have so much cash sitting around that they're running out of things to do with it. So they just keep buying stocks, buying properties, buying basically anything they can get their hands on. The companies themselves have also been on a major buying spree with an estimated $1 trillion in stock buybacks happening in 2019. The Fed just keeps handing out virtually free money. And what do those companies do when they get that money? They buy their own stocks back, inflating the price of their stocks and creating a great market. Now, all of this has created a perfect storm for stocks to reach these insane valuations that we have been seeing for a lot of them, and of course for the new highs for the stock markets overall. There's also a historical trend that shows that when the S&P 500 has risen 20% or more over a calendar year, and in 2019 it rose nearly 29%, then the S&P 500 will have a positive return in the next year, at least 2/3 of the time that has been true, with an average of more than 6.5% gains in that following year. However, there are more factors that show that the markets are actually in for some very stormy weather. The greed index is extremely high right now for the markets, nearly as high as it possibly can be. And let us remember that old quote by Warren Buffett: "Be fearful when others are greedy, and greedy when others are fearful." Outside of the companies and the banks, which are sucking up stocks, it is largely greed which is driving the rally. It's the key force behind it right now. And investors are really ignoring some of the key risks that are happening at the macro level and are becoming very overcomplacent about the overall buoyancy of the market and the strength of the economy. Remember that old, $247 trillion everything debt bubble? That's going to pop at some point. That can't go on forever. It is the elephant in the room of the global economy. And while it may not happen soon because they keep printing money to stop it from happening, it is unsustainable and it will pop at some point. And nearly 10% of that $247 trillion global debt pile is just the US government. And then you can factor in US house debt, card debt, student debt, corporate debt, then it becomes very evident very quickly that the US is exposed in a very, very big way to the coming financial crisis. The likelihood of a global recession is becoming increasingly likely all of the time. The chances that it will be devastating to a degree not seen since the Great Depression continue to grow as the economy becomes deeply overbought on many levels. But that is not what you're supposed to think. The markets are strong, man. The all-time highs, these are amazing. We're all gonna get super rich. Let's run out and buy some stocks right now. This is going to last forever. In fact, the economy is so gosh darn good, the Fed is currently doing a daily bailout of the overnight repo market because the banks, not trusting each other to be good for their debt obligations, that is exactly what happens in a healthy economy, isn't it? And look, that's just one small issue that could potentially collapse the global financial markets. I haven't even mentioned the incestuous derivatives markets that could cause a cascading collapse because every major commercial bank is overexposed and their overexposure is linked to every other bank. Cool and normal though, right? And what are two of the most successful investors in America doing right now as the stock markets soar to new highs? Well, Ray Dalio's Bridgewater has taken a $1.5 billion options bet that the markets will fall by March. And Warren Buffett is sitting on more than $128 billion in cash, sitting, waiting, like a vulture to swoop in and feast on the corpses of the stock market correction. The CBOE Volatility Index, or the VIX, is on track for a 54% decline this year, which would mark the gauge of the coming volatility's worst yearly drop on record. And this isn't even factoring in risks of a new hot war in the Middle East and the insane disruption that could cause to the global economy, not to mention all the horrendous results of war in of itself, but just focusing on the economics here for one moment. The Gulf states of Iraq, Iran, Saudi Arabia, the UAE, and Kuwait account for around 60% of the global oil reserves. The knock-on effects of a massive supply shock to oil would bring the world economy to a virtual standstill as prices would just skyrocket for petrol at the pumps and for planes and for transport and everything. Then, of course, you have the tensions between the US and China and the EU that with their whole trade war thing they've had going on. And look, all that being said, this is not intended to be a doom and gloom kind of video. Markets move in cycles, man. Learn from them, profit from them. What do you think Warren Buffett is doing right now? I think he's sitting around worried about an impending collapse? No, he's watering at the mouth, waiting to buy the blood in the streets. That's what he's doing. Anyway, told you we'd talk about Bitcoin. We're going to talk about some Bitcoin now. The total wild card here is, of course, Bitcoin. This is a crypto channel. We talk about crypto in relation to the rest of the world. Bitcoin has been the best performing asset of the last decade, making the gains on the S&P 500 look pretty gosh darn insignificant in comparison. But will a massive stock market crash actually be good or bad for Bitcoin? And we have to be honest with ourselves. Bitcoin has never seen a 2008 global financial crisis level event, or even worse than that. It's unknown territory for Bitcoin. Yes, I know Bitcoin was created as a response to that kind of fiscal insanity, but it has not lived out in the wild during such an actual event yet. Now, on the one hand, you have a lot of traditional investors, that whole big new money crowd. They're all following the S&P 500, throwing all their money into stocks since it looks like a safe play, at least for the average investor. And they're not putting money into Bitcoin since, crypto's a bit of a gamble, and I heard something bad about it on the news media one day, and I think it's gone down a lot this year, right? So it's probably not a good time to buy it. S&P 500 is just hitting a new all-time high. Throw some money into that. The obvious trick is that psychologically, right, buying Bitcoin when the price is down, when people are afraid, that's the good decision. Buying the top of the S&P 500 and everyone's greedy, less so. But when the S&P has a downturn, and it will, then investors will start seeking returns elsewhere. Bitcoin will inevitably see some of that money flow. Of course it will. Another factor is that as inflation increases, especially if we see rapid inflation in key economies, then assets like Bitcoin and gold will of course then become more attractive to investors as well. But really, if the S&P has a major movement that is more than just a regular kind of correction, and if the economy moves into a full-blown recession or even worse, then it's really just a guessing game of how Bitcoin will actually do in that situation. I mean, let's just keep it real here for a second. There's probably not going to be an insane amount of new retail buyers rushing in if millions of people are losing their jobs, if banks are foreclosing on people's homes, and if people are trying to figure out how they're going to put food on the table this week. Those people aren't buying Bitcoin. But in that situation, we might see some of the wealth protection crowd showing up. You know, we've seen this actually happen in quite a few different economies before. Greece and Argentina and Venezuela. They've all shown that there is a strong demand for Bitcoin during times of extreme economic crisis. So in a weird way, it might be good. I don't want to see all that human suffering happen just to see the price of Bitcoin go up, without a doubt. But investors flee into safe assets. We've seen this repeat with gold many times. And yes, we've seen it happen a few times with Bitcoin. How much money flows into Bitcoin in that situation? Anyone's guess. But the crazy thing about a major market event is, of course, that the rich will ride it out in relative ease, as they always do. They will be buying the blood in the streets. The big question as Bitcoin investors that we need to ask ourselves is that, will that money just continue flowing into the stock markets? Or will some of these rich investors start flowing money over to Bitcoin? Will we have enough refugees from inflation and fiat into Bitcoin? And you know that I'm very bullish on the future of Bitcoin for a whole range of factors that I'm not even talking about in this video, but it will certainly be interesting to see how Bitcoin holds up in a major financial event like 2008 or worse. What do you think is going to happen if we see a major correction or even a recession hit the major economies? Will Bitcoin thrive in such a financial crisis? Are the markets in for a big correction? Do you think the S&P is way overbought and it's going to go down? Or will that free money keep the house of cards propped up just a little while longer? Let me know about it down below in the comment section. You guys rock. Thank you so much for tuning in to this video. I hope it was useful for you. Gave you something interesting to think about as always. And I really do want to know your opinions. Make sure you let me know what you think down in the comment section. I read them all. I love reading through the comment section. It's always a bit of fun for me. And if you're new around here, make sure to subscribe to the channel. And make sure to hit that like button too if you did enjoy this video. Long live the blockchain. And peace out till next time.